Top investing strategies from Donald Trump. Those who believe that Donald Trump's ability to amass $1 billion through his business acumen made him the president. However, one should perhaps take a look at some of the monumental mistakes he has made in the past. A good example is Trump Entertainment Resorts, which has failed 3 times in the financial game known as Chapter 11 bankruptcy, or the Trump mortgage, which he forecasted in 2006 would become the most powerful home loan institutions in the United States. Even Trump's line of luxury steaks, with collections priced as high as $1,000, tanked so badly that a snarky reviewer was inspired to write, introducing Trump's new campaign slogan, "Very little meat, too much marble." This was in reference to Trump's line of steaks, which had collections priced as high as $1,000. However, there is no ignoring the fact that Trump's status as a tycoon is motivating a significant percentage of voters. It remains to be seen whether the wizards of Wall Street can find similar inspirations, but in the meanwhile, you can always evaluate Trump's fortune and determine whether or not there is anything in his playbook that is worthy of replication. According to Donald Trump, his success is the result of selling lofty goals and relentlessly pursuing them. However, the majority of the time, he was successful in achieving his goals and ended up with what he had aimed for. When it comes to investing, he believes that it is beneficial to have aspirational goals, but that one must also have a strategy. When one wants to achieve anything specific with their investment strategy, it is essential to have a plan in place that is tailored to that specific goal. He also claimed he always assumes the worst-case scenario before entering into a business transaction. He claims that if you prepare yourself for the worst-case scenario and demonstrate that you are able to accept it, then the good will always take care of itself. According to him, no one can predict when an economic crisis will occur. Because of this, it is essential for investors to take precautions to ensure that the performance of their portfolios is not adversely affected in the event that a circumstance similar to that one occurs. The portfolio can be protected from these kinds of losses by diversifying its investments, which is one of the ways to do so. Your investment portfolio will be more stable if you purchase a variety of assets, such as stocks, bonds, cash, gold, and so on. Additionally, he recommends not taking up too much debt in order to invest. If the economy is experiencing a recession, you run the risk of suffering significant financial losses. Hedging your bets is yet another frequent recommendation that Trump has offered. Utilize either cash, gold, or a collection of assets that are not highly associated with one another. And when it comes to spending, Donald Trump says that one should spend what they have to, but that one should also avoid spending more than they should on something. Investing entails a number of dangers, most of which are outside of the control of the investor. The costs, on the other hand, are something that can be controlled by everyone. You can get a better handle on your expenditures by cutting costs elsewhere, such as on the broker who handles your finances. Alternatively, you might put your money into low-cost index products. Additionally, he recommends finding ways to reduce the costs of investments. Along with that, Trump also advises investors to never become emotionally invested in a transaction or a single strategy for making investments. Because most business transactions fail, no matter how good they initially appear to be. He makes it a habit to keep a variety of different options open. One should never allow themselves to develop feelings for a particular stock, asset class, or industry. If an investment is not providing the return that you want, it is in your best interest to sell it and move on to something else. He recommends gaining additional knowledge about the equity and bond markets. And Donald Trump says that one of the most misunderstood principles that contribute to success in real estate investment is determining the ideal locations for a property. He claims that the ideal locations is not something that is absolutely necessary. You need to find the greatest possible deal. This is something that should be kept in mind by those who invest in both real estate and the stock market. It is essential to hunt for markets that provide the finest discounts and higher returns in order to maximize profits. These are the most vital aspects, but investors almost always neglect to pay attention to them. When it comes to real estate, it is important to look for the finest offers you can find, even if you have to look outside of your home country. It is obvious that Trump enjoys taking chances. These are the types of accounts in which he has the potentials to make multiples of his investment back or lose a significant amount of money. According to J.W. Sukitz, a clinical assistant professor of business administration's finance at the Katz Graduate School of Business at the University of Pittsburgh, they are very risky if the market goes against you. In other words, if the market moves against you, you will lose money. However, according to Sukits, in order to invest like Trump in this manner, you would need a lot of money. Even an accredited investor with a net worth of $1 million would never be able to get into one of those hedge funds. So, that's all for today's episode, and if you liked the video, make sure to hit the thumbs up button. And if you're looking for more interesting content, then hit the subscribe button for future updates.